Hello, we're going to discuss Eurodollar market today. Foreign currencies, because of increasing trends of market valuation, increasing trends of international trade, interdependence of one economy over the other, will always go on to create dependency between various currencies. The currency market is a huge market. The foreign exchange market that runs 24 hours a day, 7 days a week, for 365 days. It's a never sleeping market you can call. The turnover of this foreign exchange market is around $1 trillion per day. Everybody, starting from commercial banks, arbitrators, hedgers, multinational corporations, individual traders, central banks, and various governments, they all have stakes in that foreign exchange market. It controls economies, it wakes up leaders out of slumber. Foreign exchange is such a thing, it can either break or make an economy. If not managed well, it will devastate the economy within years. If managed well, it can bring you sunny days. Euro-dollar market is one part of the entire spectrum of foreign exchange market. The spectrum of looking at euro-dollar, that why the dollar is lined up with euro. Is it a market which mixes euro, the currency of European Union, with the dollar market? Is it something that is going to affect a particular trade relation between European Union and United States of America? But don't get confused. Euro-dollar market is something else. Contrary to the name, as it seems that euro-dollar might be euro and dollar combined, euro-dollar actually has very little to do with the euro or European countries. Euro-dollars or US dollars dominated deposits at banks outside of United States. This market involved, and it is actually gathered evolvement in early 1950s, primarily in Europe and especially in London. Hence the name is given euro. But euro dollars is not required to be traded in London only. It can be held anywhere in the world except that of United States. The euro dollar market is relatively free of formal regulation. Therefore, banks are allowed to operate on narrower margins than their counterparts in the United States. Because in the United States, the Federal Bank and the Federal Reserve System has put a margin on the trading of dollars. You have a bid and ask, the spread kind of equation. But in euro dollar market, the margin can be actually very low because the volume is going to be very large. Because of this lack of regulation on the part of euro dollar market, the market has expanded pretty large, and it has expanded as a way of circumventing regulatory costs. US dollar denominated deposits at foreign banks or foreign branches of American banks has also denominated Eurodollars. By locating outside of United States, Eurodollars escape the regulation by Federal Reserve of United States. Originally, the dollar-denominated deposits not subject to US banking regulations were held almost everywhere in Europe, but exclusively in Europe. Hence, the name was Eurodollars. These deposits, primarily in the 1950s, just after the end of the World War II, and 1960s, were held only in Europe. But they are also held in such countries as Bahamas, Canada, Cayman Islands, Hong Kong, Japan, Netherlands, Antilles, Panama, and Singapore. Regardless of where they are held, they have been given the name of Eurodollars because of the primary involvement of European countries, specifically London and United Kingdom. They are known as Eurodollars. The average Eurodollar deposit is very large. An individual can trade in the Eurodollar market, but the minimum amount of involvement is $1 million and has a maturity of less than 6 months. A variation on the Eurodollar time deposit is the Eurodollar certificate of deposit. A Eurodollar CD, certificate of deposit, is basically the same as a domestic CD, except that the liability of a non-US bank. Because Eurodollar CDs are typically less liquid, they tend to offer higher yields. Normally, this is a place for short-term investments and short-term money market. The Eurodollar is obviously out of reach for all but the largest institutions, because the minimum amount of trading or investment or borrowing and lending activity that can be done with Eurodollar is $1 million. The only way for individuals to invest in this market is indirectly through a money market fund, because you are not allowed to invest directly in Eurodollar market. Eurodollar has a history. After the end of the World War II, there was a lot of trading happening outside of United States. Countries like Russia, countries like Denmark, these countries sold a lot of gold and got dollars instead. These countries never wanted to deposit the dollars in New York Bank. They deposited the dollar in Britain and France, primarily in London. These deposits at that time in Europe was called euro. Because the money is denominated in terms of dollar, they came to be known as famous as Eurodollars. The currencies deposited by national governments or corporations in banks outside their home market. So which means any currency deposited by national governments or corporations in banks outside their home market can be called a euro dollar if it is outside the United States and denominated in terms of dollars. So for example, a South Korean won deposited at a bank in South Africa is considered euro currency. But having a euro doesn't mean that transaction has to involve a European country. However, in practice, European countries are involved most of the times, but it doesn't require the presence of a European Union country in every euro-dollar transaction. The euro-dollar market consists of Asian dollar market also. The Rio dollar market, that of South America, Brazil, Euro and Yen market in Japan, Euro sterling market in UK, Euro Swiss franc market in Switzerland, Euro DM market, that is the shortcut for Deutschmark in Germany. So euro dollar market consists of a lot of markets outside that of United States. The term Eurodollar came into play because the market had its origin and earlier development with dollar transactions in European money market. So which means the market was evolved, it started in European countries, and thus the dollar transaction was controlled from outside, but neither could control the transaction. Neither UK could consider it done in UK because it's in dollars, so it cannot toy with the intrinsic value of dollar. At the same time, the United States of America cannot and is not in a position to control the market because the market was outside that of United States, even if it is denominated in US dollars. The importance and important feature of Eurodollar market. It's an international market beyond control of any particular nation. It is aptly said by somebody that the dollar deposit in London are outside US control and outside British control because they are in dollar. The growth of this market is because of its outsideness in each market, thus out of control for anybody, which means the market is happening in Europe, basically in London, but in dollars. The United Kingdom government or the Federal Bank of the United Kingdom is not in a position to control the value of dollar. So Eurodollar cannot be controlled in United Kingdom itself, even if it is happening, the transaction is happening in United Kingdom. At the same time, it is also out of the US control because even if the transaction involves US dollars, it's outside the territory of United States. So the growth of market was primarily can be controlled to the fact that it remained outside the purview of any nation, and any which nation cannot control the market because of its existence. But Eurodollar market is a short-term money market. Eurodollar is a short-term money market, although some of the Eurodollar transactions have a maturity value of more than 1 year. Primarily, these are short-term instruments. These are like certificate of deposits. Normally these transactions expire in 3 months with a nominal amount of interest. For example, if a country like Pakistan doesn't have enough foreign exchange reserve deposit to pay a debt which has been taken from International Monetary Fund and due to be retired in less than 2 months' time, in that case the Pakistan government will be faced with the enviable position of defaulting in the payment of an international loan, thereby eroding its own credit creation, and thus the ranking of the country will go down in eyes of credit rating agencies like Moody's and Fitch and S&P. It will go to the European market, Japanese market, to buy or borrow Eurodollars. It can buy Eurodollars for the required amount for a period of 6 months, ranging from 90 days, 180 days, 270 days, etc. So it can borrow the required amount at a very minimal fair rate of interest, and thus by borrowing it can repay its obligation of payment to IMF, and when the 6-month period expires it has to pay the short-term borrowing it has made from the Eurodollar market, either from a central bank or any particular nodal agency, along with the interest. So it is a short market and normally transactions doesn't exceed 1 year. It's also a wholesale market. This market is a wholesale market in the sense that the Eurodollar currency is dealt only in large units. small units, 1,000 units, less than $1 million, that is almost equal to 5 crore rupees under normal circumstances, is required to be invested by individuals. Central banks and governments don't trade in millions, and that too in a single digit million. So this means individuals are allowed to enter the market through the indirect route of investing in money market funds, hedge funds. They can invest in minimum of $1 million. So because of the size involved, the transaction is wholesale in nature. Not every individual can be allowed to enter the market on a direct route. But there are certain factors which led to the growth of Eurodollar market. One of the factors is political factor. The Cold War between the United States and communist countries, in particular after the World War II in the 1960s and 70s, contributed hugely to the growth of Eurodollar market. Because of their fear of blocking out seizure of deposits by the United States of America, in the event of hostilities, the Russian and East European banks sought to place their dollar balances in European banks, especially in Paris, in French, and in London. So, which means because of the Cold War situation, these governments could not trust the American banks. So, they put the Eurodollar, the dollar in fact, at that point of time, in European banks rather than in American banks. The second factor which led to a huge amount of growth in Eurodollar market is the balance of payment deficit in United States. From 1950s, the United States balance of payment was a continuous deficit, except 1957, 1958 actually, the BOP was deficit for the United States, which means that the balance of payment of United States were in deficit, and there was an increasing flow of US dollar to those countries which had a surplus of dollars with the US. Since 1958 was the only year in which the BOP of United States was not in deficit, it was surplus. But after 1958, the BOP deficit of United States grew in an alarming rate and became a factor in the growth of Eurodollar market. Because of the deficit, large amount of dollars in fact at that point of time in the 70s and 60s was actually paid to outside countries. So instead of keeping those dollars on from exports and being paid by US government, they were kept in generally European banks in London. One other factor which led to the growth of Eurodollar market in general was innovating banking. The innovative banking innovated and started primarily by the US banks, who went on to become a trend in European banks. And the willingness of banks to operate on a very small margin encouraged the growth of Euro markets, because you can always get a short-term large loan from Eurodollar in the European banks is likely possible. And because of that nature, because if you take a loan for a short-term investment, otherwise you are going to pay 6 or 7% interest per annum right in the early 2000s. But what happened is Eurodollar loans were available for as little as 3.5% in international market, for like suppose a $200 million for a period of 5 months or 6 months, 180 days. So that means the margin was very small. So because of the margin was very small, it was later compensated by the involvement of huge amounts. The huge amounts actually was able to convert the small margin into higher amount of profit because of involvement of huge amounts. So innovative banking was possible because of the presence of large amount of dollars with European banks and various East European countries, generally Poland, Russia, Greece, and others. The Eurocurrency market includes participants like governments, international organizations, central banks of various countries, commercial banks, corporations, multinationals, traders, and sometimes individuals. Although the restriction, there is an entry restriction for individuals, that individuals directly cannot trade. They will not be allowed to trade in euro currency uh, on their own capacity, but they can always going to enter the euro currency market, euro dollar market, through money market funds and hedge funds. Supply and demand of euro dollar is one of the primary requirements, that if so much money, so much euro dollar is available for lending and borrowing facility, then from where, what are the sources that these banks are getting the dollars? Some of the central banks of various countries, like development countries like Malaysia, Singapore, there's huge trade surpluses. They deposited some of their funds with the European banks. So central banks have quite a number of traders, large trading countries with United States, where various countries as one of the primary contributors and supplier of dollar to European market. The enormous oil revenue generated by OPEC countries also flew into this market. Countries like Iran, Iraq, Libya, Kuwait, Venezuela, they're going to invest their dollars in European market. Other sources came from MNCs, large number of European MNCs, Asian MNCs, MNCs in Africa, Singapore, Hong Kong. They put their surplus funds into euro dollar market to gain short-term money. The demand for euro dollar is also primarily coming from various governments. One of the significant group of borrowers is various governments having large trade deficits, having small amount of foreign exchange reserves. The frequent hike in oil prices and consequent increase in the current account deficit compel them to increase their borrowings. Commercial banks in need of additional funds which they can use for lending purpose further. Suppose a bank is required to lend, the company is willing to borrow $10 million from a bank. It doesn't have the funds. It can lend from the Eurodollar market at 7% and borrow. It can borrow from the Eurodollar market at 7% and lend to the commercial organization or MNC at market rate of 12% for a short period of time. Thereby the commercial banks and sometimes the larger banks actually, uh, banks like ICICI, SDFC banks, State Bank of India, they were heavily involved in the transaction of euro dollars. But what is euro currency market? It's a little bit different from the euro dollar market. Euro currency market is a market for borrowing and lending of currency at the center outside the country. Euro is a single currency which was launched in 1999, but within a span of 12 years it has become one of the most important currencies of the world. Euro is also an important international reserve currency. It's administered by European Reserve Bank, European Central Bank. The currency is used daily by some 400 million Europeans. Euro dollar or euro currency refers to bank time deposits in a foreign currency. There are a lot of other instruments which are also actively involved in the euro dollar market: euro credits, euro loans, euro bonds, and euro commercial papers. The euro currency market is basically an unregulated market demand and market supply. It involves mostly short-term deposits and sometimes long-term loans. It's largely a wholesale market, taking on only time deposits, short-term deposits, 3 months, 6 months, 9 months deposits. And euro dollar is basically a LIBOR-based market, thereby the banks are allowed to run on a very small, narrow margin. But because of the evolvement and involvement of large sums of borrowing and lending, these banks are highly compensated. You can see the most traded currencies on the forex market. The largest market is held by US dollars. Then the euro holds a considerable amount. Almost 44% of the world's foreign exchange market is held by US dollar. European Union's currency euro holds almost 19%. Japanese yen is considerable amount of success. It holds 8.25. Great Britain pound, that is pound sterling, at 7.5. China's currency is controlling 3.44. Australian dollar is controlling 3.35, and Canadian dollar is controlling 2.1. The others, including Brazilian real, Indian rupees, they control 13% of the market. So by far, dollar is the most dominating currency of the world, followed by euro, yen, and pound. You can see the foreign currency reserves held in either US dollar, euro, Great Britain pound, Japanese yen. The total amount of foreign currency reserves held all over the world, 63% is held by dollars, held through dollars. So dollar is the most acceptable currency to most of the countries and the central banks all over the world. So 63% of world's currency foreign exchange reserves is held by and held through dollars. Euro comes a distant second with 26% acceptance, but euro is only 12 years old as a currency, but it has gained substantially in the world market. Great Britain pound has substantial amount of acceptance all over the world, but being a small nation and part of the euro, it only holds 4% of world share. Yen holds 3%. All the other currencies are only controlling 4% of world's foreign exchange reserves, which is very small to look at. But basically, what is the difference between a Eurodollar market and domestic money market? The euro currency market is widely believed to be purely a wholesale market, but a domestic money market like what operates in India and most of the countries is a retail market. The euro currency market is not a regulated market, it is highly unregulated in international arena. But a domestic money market is always regulated by respective governments and central banks. But there are a number of problems in euro currency market as compared to domestic markets, such as jurisdiction, the acceptability of a freeze on deposits in one country by another country. If you're depositing in your money in UK, there can be a problem between you and the bank. There can be a problem between your country and the other bank's country. So in that situation, your account can be freezed. So non-release of these accounts will create problems domestically for the country and its companies. But a domestic market doesn't face some such kind of problems, generally because of jurisdiction, because the jurisdiction is related internally. So there is no question of an account being freezed without having to deal with any kind of illegality on the part of the depositor. The Eurocurrency market is almost exclusively concerned with matched deposit dealing. That is, each deposit we tend to be matched by an asset of the same currency and of similar maturity. Because it is a short-term currency market, so demand and supply has to be matched. Eurocurrency market loans are typically made for a specific period and funded by a deposit of similar period. So unless you have a deposit, you cannot extend a loan, you cannot lend. One of the primary functions of Eurocurrency market is a cheap source of working capital. Since the dealings are between Good banks with better credit rating in world market, normally the amount of cost, transaction cost is very less. This market is also has the advantage of being highly liquid, and because of lower interest rate and very easy procedural formalities, this is accepted as a better option of borrowing and lending in the international as well as domestic market. There are different components of European market. First is commercial banks. The commercial banks link the external with the domestic market, taking funds from one and investing them in the other market. So they borrow from the Eurodollar market and invest in the domestic market, thereby earning valuable interest. Private individuals. Private individuals, although they invest in Eurodollar market, they're actually small, minor participants because they are not allowed in their own capacity. Rather, they can invest in Eurodollar market through a money market fund. Corporates, on the other hand, are larger borrowers. Depending upon the name, credit rating, size, and good standing, banks can actually lend large amount of money on the basis of the creditworthiness of the corporate for a relatively small period of time. In the last decade, though, there has been expansion of government borrowings and government-related borrowings. This is especially true for medium-term euro credit, which has become widely tapped for infrastructure projects and for financing balance of payment deficits. If a government is short on funds for putting the money into domestic infrastructure creation, building roads, building airports, building dams, building electricity equipment, electricity generation plants, it needs money from outside, and Eurodollar is the safest. And having to pay for a low rate of interest, it is the best market to borrow money at. So governments, small countries specifically, they have started to borrow from Eurodollar market very heavily. Various euro financial instruments are euro deposits, euro loans, euro bonds, and others. Euro deposit is euro currency deposits, time deposits like fixed deposits, usually for short-term maturity outside of one's country. So if a Japanese is investing in a fixed deposit, fixed interest rate deposit in UK, it's a European country, it's a euro deposit, mainly in dollar. Euro loans. Many Eurodollar loans are direct bank to customer credits on the basis of formal lines of credit or customer relationships. Euro bonds are international bonds denominated in a currency different from that of the country in which they were issued. An Indian company can borrow money in the form of euro bonds from Europe outside that of United States. So when a company in India is lacking funds which can be invested by it in the market in the domestic country, it can borrow in the form of euro bonds which will be issued in Europe but to be used in India. India's currency is rupees, but it is going to be issued in terms of dollars. Usually, euro bond is issued by an international syndicate, categorized according to the currency in which it is denominated. A euro dollar bond that is denominated in US dollar and issued in Japan by an Australian company would be an example of a euro bond. The Australian company in this example could issue euro dollar bond in any country other than US. So this is a kind of new avenue for getting funds from. Eurobonds has become specifically attractive as they give issuers the flexibility to choose the country in which to offer their bond according to the country's regulatory constraints. So Indian company can issue bonds in Japan or Australia in terms of dollars. Euro bonds are specifically attractive to the investors as they have small par values and high amount of liquidity. The euro currency market is entirely a wholesale market. All the transactions are unsecured credits, hence the fact that lender pay particular attention to borrower status and name and creditworthiness. So it's a wholesale market lending large amount of money for small rate of interest. So Eurodollar market has become very significant in volume and scale on the basis of adoption by various countries, governments, MNCs and central banks. Because it is a source of cheap short-term lending, many are falling in line to have this kind of a loan. So countries can borrow, central banks can borrow, central banks can also lend the surplus to gain short-term gains. Commercial banks are borrowing heavily all over the world for EUROCURRENCY dollars. And individuals are trying to put money, their surplus funds which are legally earned, into money market and hedge funds so that they can earn large amount of interest from it. Obviously in terms of dollar. With the rupee going down for dollar, the actual interest on, if it is 6% in dollar, it can be much more in terms of rupees. So we have come to a conclusive part of Eurodollar market. Eurodollar has become a tool of international trade, international drilling in funds when required in a short-term manner that can be availed from Eurodollar market without having to depend upon central banks of the domestic country at a large rate of interest or commercial banks in that country. So Eurodollar has become a civic grace. You can find more study material, more details about it, and use it for your own knowledge, enhancement of knowledge. Thank you. Thank you very much. We'll be meeting soon with a new topic and new subject. Thank you.